Good morning, guys. It is Tuesday the 7th and talking to you from another hotel room on the road, trying to keep things moving. But I want to talk to you a little about what we're seeing in, of course, the markets with respect to housing, with respect to mortgage bonds, the difference between the 10-year and the MBA mortgage-backed securities themselves, because a lot of people are still looking. I know Scotty and I talk about it all the time. Scotty says there's a lot of folks that will communicate with him about what's going on in the 10-year, the 10-year treasury, and say, for what they're looking at, rates should be lower than what they looked at the last day. Well, things have adjusted, right? The market doesn't always follow the same. The 10-year is a long-term instrument, just like any like a bond, right? Just a bond is really what it is, just like mortgage-backed securities are a bond. So bonds traditionally will kind of go along in the same direction. No different than trying to, look at something on one of the indexes, say like the NASDAQ, right? Look at the NASDAQ. If you might see the NASDAQ itself going up or down, but pick a specific stock in there. There may be a specific stock going the opposite direction of the NASDAQ, even though it's in that index. That particular stock may be performing in a way that may be better or worse, depending upon the direction. It does happen. So since we know that happens, know that also happens in the bond world. So not always is there capital going into one versus the other. And as a result of that, you might have a differing thought process than what reality is. So it's one of these things where you really just got to get to know a good partnership, develop a partnership with a mortgage company, something that does this, especially for you investors. You investors need to find those guys. And I'm hoping that's us. And if it's not us, that's fine too. That you can trust is going to give you the information you need to know to be able to move forward in a way that makes sense. Now, one of the things when it comes to you as a real estate investor is not only getting those partnerships, but understanding as much as you can about the market, but not to the extent that you actually hinder yourself. If you ever wonder what's going to be your biggest hurdle to overcome in your business, turn your camera on your computer and look. It's going to show you can be the biggest hurdle that you have to overcome. So the best thing for you to do is educate yourself enough to understand when a person's jerking you off and when they're not, but then also educate yourself enough to know those people that you can trust, and then just roll with those folks and make sure they're going to trust you. And when they violate that trust, that's you have to question whether or not you have to change your judgment. But for the most part, getting people you can trust that have very common interests with you, that's where you want to be able to roll forward and be able to be successful in what you do. Now, looking what we've got going on in the markets today, the one thing that is really standing out that benefits all of us as real estate investors is, of course, housing is going up, continuing to go up. There are surveys that were done that home ownership is still, one of the most important things to people. So what does it mean? Of course, increased demand. Right now, we still have huge demand in many markets, but that demand is starting to taper. But as that demand continues to exist, we see property values continue to go up, right? So as long as property values continue to go up, as long as you continue to develop equity, those are the times you want to refinance. Now, we're in a market right now that we're looking at how the yield is going on the 10-year. Now, go back to that 10-year. There's a flattening of what they call the yield curve, meaning the yield on the 2-year versus the 10-year, at the short-term bond versus long-term bond, one should yield a higher income than the other, right? If you're willing to risk for certain lengths of time, you should get more money. Well, that's starting to change. It's actually getting to where it's starting to more flatten out, where they're actually yielding the same return or close to the same return right now. And then there's something that's called an inverted yield curve, when they flip directions, where one actually makes more money when it traditionally should be making less for the investor. And that flattening, first you get the flattening, then you get the inversion of the yield curve, typically signals a recession. Now we're starting to see that flattening right now. We're starting to see that where the yield between those two is getting very similar, starting to point towards potential recession, 2, 3, 4 years down the road. What does that mean? Better interest rates. That's typically what ends up happening. So if that is the case, just know with what we've got happening right now with the markets, we've got the equity building into the homes, potentially for refinance down the road, to pull cash out, not just for interest rate. Don't let interest rate be your thing. That we may have another, merger of the two, right? Increase of values plus interest rate drop. It could make sense to do one of those cash out refinances down the road. Why do I bring that up? Why does it matter? Because you're going to be tempted to pay points right now. Well, I really got to have this really low interest rate. Don't let yourself get suckered into that thought process. That's money you're paying now that you may not recover, because you might find an opportunity to pull cash out within the next 5 years on a similar or lower rate. I can't say what's going to happen with the rates. I'm just guessing. Well, then you never realize that buy down of that rate. Don't get suckered into that. In fact, if it looks right to even take a slight credit, because the rate, an eighth of a point may give you a couple thousand, or a couple thousand would be nice. a few hundred, whatever, to offset your costs, that might be something to look at too. So just things for you to think about as you're working on your business. Don't put yourself in a position where you get sucked into the consumer thought process. Think about this as a business. What's the long-term effects of your decisions? Now let's get into some of the charts out here. I want to be able to share with you what I'm seeing out in the market, just so we can get a good shot of. And some of my charts are not even up. I don't know how I did not get those to work. Okay, well, looks like I'm not going to be sharing any of that today. Everything is looking very, very similar to where we were looking at before. So, we've seen where there is a definite downward channel, right? But we do still have that support, that line I keep watching. I don't know if that's the line I should be watching, but that's what I'm watching, just looking back in history. And we've hit it, come off of it, hit it, come off of it. And we're staying well above that, right? So we're probably somewhere in the range of about 14 basis points above it right now. I'm hoping we can hold that, but also remember, we're in a downward channel. We're getting squeezed into that. Something's got to happen to push it one way or the other. The way it kept us, we did go below that line I was watching for a short window. And then the next day, the Omicron variant came up and everybody freaked out of what's going on in South Africa. And that brought us above that. It's interesting how COVID has helped the mortgage-backed securities pools a couple of times in the last couple of years, probably significantly. So those significant improvements has helped us maintain where the rates are. What I am cautioning you with that is, don't think that we're always going to get some little safety net that comes in and saves us. There's going to come time that squeeze is going to happen. It's got to go somewhere. And if it does go down and we do breach that support line that I'm watching, the 101.90, we might see a massive decline there, therefore an increase in the interest rate. So just be cautious of that. Always talk to us, always reach out to us. My team's got your back, and we want to give you the best information we can, but also don't be afraid of that. There's going to be deals down the road. There are still going to be deals. I don't care what the rates are. Deals are deals regardless, and our inflation is paying for all that. So don't stress over it so dang much. Do the best you can. Focus on the right people. Focus on the right opportunities out there. Quit jerking off. Support OUR, and let's move forward into Friday. Talk to you guys then.